high respected, and the second 15-minute candle of the 30-minute starts to break the low, then you're like, okay, you know what? There's a high probability to continue down, because maybe that second half of the 30-minute may push the entire 30-minute candle all the way down, right? Or all the way bullish if we're looking at from a bullish perspective. This is the scenario that have worked over and over and over and over again. But the trick is to actually wait for this candle to form. The trick is to wait to see if the candle is really forming like, once the candle forms like this, the next waiting situation is that you have to wait for the next candle to break the low at this point. This is something that has worked. Now, we're going to talk about another scenario, and that scenario is going to be a little bit more risky. It's risky in terms of, because the trend is already bearish and the trend is already bullish, and you're really trying to catch that wave, right? What it looks like is like this. Let's say you have a bullish candle form like this, and you have another bullish candle form like this, and for example, we have a resistance at this point, and now all of a sudden, we have something bearish form, candle forming bearish, and then we're also forming some sort of a confusing candle, and then we have a candle that's starting to break the high of this previous candle. Now, this is where some risk comes in. For this opportunity to continue pushing up based on an impulse entry, it has a lower probability than the examples we talked about earlier. Okay? You have to understand this. This has a lower probability. Even though you want to say that, so now this is where a lot of moves are missed, right? A lot of times you're waiting for the candle to close because, that's the safest way. But essentially what you see is that candle starts to move up and it just continues to move up. And when it continues to move up, you're like, oh man, why didn't I enter an impulse entry? It would have been so perfect. Now I've missed this entire move. It has gone up. There's no way to get this back, and yada, 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 yada. That's very normal. That happens, right? So now if you're somebody who gets stuck in these and you're not focusing on impulse entries, you're not trying to learn them, you're not trying to anticipate them, but you're missing trades, that's perfect. Because once the candle starts to break these highs here and here, you're looking at this and saying that, okay, you know what? If we broke above these highs, maybe, just maybe, I could have had an entry right over here as it broke this high right here. And my stop loss could have been below this candle. Because if we're breaking above this high, right, we're making a higher high at this point. There's a very high probability we're making a higher high. And at the same time, if we're making a higher high, then there's a higher probability we're also making a lower high, like a higher low at this point. Now, when does normally this happens? Normally this happens in high volume times, right? High volume times, market opens, market closes, we have news, we have breaking news on gold. We saw earlier on that price went up on gold about $30. 300 pips gold went up yesterday. This was the 7th November, so this may be recorded late. Anyway, whatever, right? So this is where you're trying to just watch to see where you could have entered. Now, again, as I said, this is riskier than the previous ones. This is way riskier. And I'm going to tell you the risk associated with this, right? Now, I know some people also have some questions, so we're going to go over those questions as well. Now, the risk associated with this is that even though if it's moving up, even though if it's breaking the highs right here, there's a very high probability it can just continue to fall back in this range, right? And this move up just becomes a candle that made a wick to the top hand side. That's the risk associated with this. So if you're someone who's willing to execute on something like this, you have to keep this risk in mind. If I'm going to execute on something like this, or if I'm going to execute on an opportunity which is presenting itself like this as it's breaking the high, and I'm trying to take a buy at this point, I'm keeping in mind that it can continue back in the range. So if the probability of it moving up higher is lower than the example we talked about in the beginning, I'm not using my full risk. I'm using half risk, or I'm using 3/4 risk, but I'm never using my full risk at this point. Never. At the same time, a more risky situation in this case could also be when you have a candle that just moves up without making a lower wick. A candle moves up without making a lower wick. That is extremely risky, because a regular anatomy of a candle is that a bullish candle is going to look like this. It's going to have a wick at the bottom. It's going to have a wick at the top. This is like something like a human with 2 arms and 2 legs. If a human has 1 arm and 2 legs, or like 1 leg and 2 arms, or no arms and no legs at all, then you're looking like, that's abnormal. That's that's a bad example, but still, you know what I'm saying. So a candle here, if it has no wick at the bottom and it starts to push up here with volume, there's a chance that it can just continue to push down to probably make a lower wick. Who knows? It can continue to move down to make a lower wick. We don't know that. So once a candle moves up with no lower wick in the beginning, I'm staying out of it. I'm staying out of it because I want nothing to do with that. That's risky. That's not according to my plan. I'm not doing anything with that. Now, normally, what I would wait for, let's say you have a candle that closes bullish, right? Now, the size of this candle matters. The size of this candle matters. Let's say the size of this candle is, I'd say like 15 pips, right? Let's say the size of this candle is 15 pips. Then I'm going to be waiting for the next candle to probably make a lower wick. If the next candle makes a lower wick and starts to break the high, I'm going to be willing to take an impulse entry for candle to possibly continue up. And you all know where the stop is going to be, right? The stop is going to be below this current candle that breaks the high. That's what I'm really looking for. If the size of this candle is like 15 pips, like you have to gauge the size basically. But if, for example, right, and I've seen a lot of people make this mistake here as well. Let's say, for example, okay, let me just make this a little bit better. Let's say, for example, that the next candle is a big candle like this, right? And now the size of this candle becomes like, 30 pips, right? This is the size is 30 pips. It has a wick on the top. A lot of guys are going to do is they're going to say, okay, what? If the next candle, it makes a lower wick and breaks the high right over here, I'm going to take a buy, impulse entry, because Raja thought this and Raja says this and this. No. You're forgetting the fundamental rule of market structure. And the fundamental rule of market structure is that whenever we're breaking a zone, the further away price moves from a zone, the higher the probability for price to retrace. Okay? We have to keep in mind. So whenever we have a bigger candle forming outside of a zone, don't try to take a buy right here. It may go up. It may go up. If it goes up once, goes up twice, now you're going to believe that, okay, it's going to always go up. And that one time, if it doesn't go up, and instead of going up, it starts to let's say goes up, breaks the high, you take a buy, and it starts to go down, you're like, oh man, impulse entries are so tough, they don't work because of the fundamental rule that the price has left the zone. Once price leaves the zone, there's a higher probability for it to come down for a possible retest. And this retest we've talked about in market structure as well. So you have to wait for a retest. So whenever you have a big candle forming outside of a zone and you haven't taken an impulse entry here, you're waiting for price to come down, do a retest, and then continue to push up. Now, this is where I start anticipating the first example to happen. Remember we talked about the first example? This is where I start anticipating the first example to happen. Let's say the next candle goes down, but it closes bearish like this. Now we all know what we're expecting. We all know the higher probability of the next candle. We all know how the next candle is going to form. Next candle, there's a higher probability to break this high, and continue to move up, and that's your impulse entry right there. So whenever you have a candle that breaks outside of a zone and goes to a lot of pips, just wait for this scenario. That's all you got to do. Wait for this. Wait for something to print that you understand. Wait for something to print that you can look and say, okay, you know what? I understand this. I've seen this before, and I can execute on this with confidence. Right? That's what you're waiting for. Another thing. Now, all these things that we're talking about from a bullish perspective, and it's 100% accurate if price is forming a bearish structure for a bearish perspective as well. It's 100% the same thing right here. Now, if let's say we have a wick here to the left-hand side, right? We have a wick here to the left-hand side, and you have the perfect candle that's forming, and that candle, like, you know, it has made a lower wick, and you're like, okay, you know what? We've made a lower wick, and once this candle starts to break the high of this candle, you're like, oh yeah, you know what? I'm going to take an impulse entry, and once I take an impulse entry, price is going to go up. I want to make pips, blah, 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 blah. No. What you're missing is that previously, this candle here was also bullish. It was also bullish, but for some reason, it got rejected. It got rejected and it came back in the range. So as this candle is breaking the high of the previous candle, there's a very high probability that it can move up, right? That it can move up, reject it, and make a wick like this. There's a very high probability that can happen. So you have to keep that in mind, right? What a better scenario would be for you to wait for a candle to close like this, to close in this area. What this will tell you is that previously we tried to break above this area, but we couldn't. The candle exhausted, went down in the range, rejected. But now we have this Robocop candle. I'm calling it a Robocop because something's strong, right? We're calling it a Robocop candle. Was so strong that it closed outside of that range. So when we closed outside of that range, and this is like, you know, 15 pips, not that big of a candle, and the next candle wicks down and breaks above this high, there's a high probability we're going to go up. That's all what I'm looking at in this scenario for impulse entries. Okay, so these examples. Now watch over this virtual class again. You have to go over this again. You know, and always keep specific, very specific formations in your mind. And they do happen. And when they happen and you execute on them, it's a beautiful thing. Trust me, it's a very, very, very beautiful thing. So, always understand this, right? Impulse entries, the first time, you're not going to get them. The hardest thing about impulse entries is fearing of you missing the trade. Even if you miss the trade, that's totally fine. You don't have to chase the trade. You don't have to be in a trade just because you've opened up a chart and you got to be in a trade. No, you don't have to, because trading is a learning process, and impulse entries are extremely hard, right? Extremely hard. They're harder because you got to wait. They're harder because you have to wait for the candle to close. They're hard because you actually have to wait to see if the pattern is forming the thing that you recognize. Once you recognize a certain pattern that's printing on the charts, you're like, okay, like, you know what, automatically and naturally you're going to say, okay, you know what? I've seen this before, and I'm going to execute on this. And once you execute on this and you win the trade, you look on Instagram or Twitter or like, you know, YouTube, and someone else took the same trade who you idolize or look up to, you're like, oh man, you know what? This is so easy. This is so easy. But impulse entries, they always start from you just sitting and watching, right? Sit and watch price play out. It slowly comes with experience, slowly comes with anticipation, and the more you anticipate certain things to happen, I promise you, the better you're going to get at that. Now, we have three, again I mentioned, we have three other sections in Market Fluidity about impulse entries, but this right here, what we discussed, was the perfect scenarios that I want to see, and different scenarios that we've seen in the market. Now, some scenarios have a higher probability than the other ones. So, normally, always adjust your risk. Always make sure the amount of risk you're going to take. Always make sure that the setup or the kind of formation that you're executing on, it aligns with your risk management, right? So now I would prefer for you to go over this class again, maybe 2 or 3 times, make notes and understand what you really want to see in the markets. Take care.